For those that are new at real estate investing, there's always uncertainties. And what's the one area of the market that's giving you pause right now? What keeps you up at night? What makes you nervous about the investments in mortgage REITs or whatever, you're looking at the current time?
Yeah, starting from the top, I think one of the things we try to take advantage of is the disconnect in knowledge that a lot of lay public investors have. So, taking a step back, what is a mortgage REIT? A mortgage REIT is basically a public REIT vehicle that is designed to give investors a dividend when times are normal. They're borrowing from a bank at a low rate, and then they're lending it out on senior projects at the senior level in the cap stack on individual commercial real estate projects. And normally that works really well. They give investors a 9, 10% dividend, and you have all these income funds and retail dividend investors that own them. Well, what happens this cycle is interest rates go up, office gets into trouble, and suddenly everyone's seeing terrible headlines. They don't give any disclosure on what they own on the underlying mortgage REIT. So imagine you're an investor sitting here. You thought you were getting a 9.5% dividend. Every quarter, there's bad news. Guys are cutting their dividend, and they're not telling you what they own, and you don't know what's left, right? If I gave you a bag of 60 balls, which is like 60 loans, and 20 of them are bad, 40 of them are good, I might know that, but the investor doesn't know that. They just see bad balls getting picked out of the bag every single quarter, and it becomes really scary. So then there's a capitulation and the stocks sell off. The advantage we have is take, for example, our largest position. We underwrote that over a 2-year basis. We sat there waiting for the right opportunity. They have 53 loans across the country. It's a very major public REIT platform. We know 48 of the 53 properties. That gives us a huge advantage over the lay public investor because, of course, the bad properties are the ones getting reported and going default. The outside investor doesn't know when the buck stops. Meanwhile, we're seeing the portfolio getting cleaner and cleaner and cleaner. And at some point, there's an inflection point where we're like, okay, 18 of the 20 bad loans are out of the portfolio. And guess what? Not only that, these are companies that report every quarter. So if I've got a mortgage REIT and they have 4 loans coming up for maturity, this literally happened last year. They had 4 loans coming up for maturity. 2 of them we knew were already good and refinanced. And then 2 of them we weren't sure about. They were multifamily projects 20 miles north of Austin and in Round Rock. And we're like, okay, there might be an impairment here. Well, the advantage we have in the public market is we know this private property. We can have brokers eyeing it. The minute it gets refinanced, we know about it. And the company's not going to report for 45 more days after the end of the quarter. So we go in with a huge advantage and knowledge over what the public markets have seen. And that allows us to drive the inflection point. That also means if the cycle turns and things go bad, we can see that on a real-time basis inside the portfolio, just like a private guy can. So that's, I think, the kind of the way we get our margin of safety. But not only that, as I mentioned before, you're attaching at a very, very senior level in the property ownership stack. So there's got to be a lot of pain before we take actual impairments.
No, that makes sense. That makes sense. So what keeps you up at night is the individual property level dynamics and figuring out how to find that
Absolutely. Yeah.
information.
So it
Yeah.
takes a ton of work because these mortgage REITs go out of their way to so you can't figure out what they are, right?
Yeah,
So
right.
it takes months and months of work, and you have got to closely monitor every single one of them. I mean, you're basically just using your connections in the local marketplace, and that's the irony of it is because all the information is public, it's just knowing where to hunt for that
Yeah.
information.